So, Tom, let's start at the top. What exactly is sustainable investing?
Yeah, well, Toby, sustainable investing, simply put, involves investing your money with an awareness of its wider impact. It's often referred to as ESG investing, which stands for environmental, social, and governance investing. And obviously, that's a bit of jargon, but it's also, I think, a helpful way of looking at this topic, how the companies that you invest in stack up against those environmental, social, and governance measures.
Okay, so it's a bit more of a mindful approach to investing. Now, that sounds like a noble pursuit, but investors may be wondering, why exactly should I care? For them, investing is all about returns, not society, right?
Well, yes and no. I mean, I think generally speaking, people are considering the wider impact of their investments far more than they were before, just as we're all a bit more aware of generally of our impact on society and the environment. But you're right, some people do worry that sustainable investing will have a negative impact on their returns. They think that doing good will come at a cost. We actually think that the reality is quite the opposite. So our analysis shows that companies that boast strong ESG credentials outperform those that don't. And this was particularly true last year during the worst of the pandemic. There are a couple of reasons for this. I think the first is that being a good ESG company is a kind of proxy for just being a good company, full stop. It's no surprise that companies that are socially responsible, diligent about corporate governance and environmentally friendly tend to be the sort of high quality, well-managed companies that we all want to invest in. And the second is that sustainability is itself a good long-term investment trend. The environment, for example, is high on everyone's agenda right now, and companies that can provide solutions to the environmental crisis are likely to be good ones to invest in if you're looking for long-term growth. They're sustainable in two senses, socially and financially.
Okay, understood. So how exactly do investors get in on this? Are there different ways to invest sustainably?
Yeah, there are. I mean, at one extreme, you have funds that avoid certain activities or industries. So some, for instance, would avoid oil or tobacco companies. Others see it as a more proactive thing, making a positive difference. So not just do no evil, but be a force for change. And that's true of the climate focused funds that we were talking about before. Another approach is to look for the companies in each sector with the strongest sustainability credentials, so best in class, if you like. I think it's helpful to think of sustainability as a spectrum, and wherever you fall along it, there's likely to be a fund to suit your needs.
Tom, thank you. That's really interesting. And if you're interested in learning more about sustainable investing, then you can visit our Sustainable Investing Hub page at fidelity.co.uk/sustainable, where you'll find our ESG fund categorization tool, as well as all the latest Fidelity insights. Thank you, Tom. That was really interesting. And thank you for watching.